You're watching the YouTube version of the We Are Innovation podcast. Join us as we explore how innovation, new technologies, and human creativity improve our lives. The future is calling.
Hi, I'm Federico Fernández. Welcome to a new episode of the We Are Innovation podcast. Today, we're going to talk about the recently published Epicenter report called Digital Euro. Is a CBDC really necessary for Europeans? And for that, we are very well accompanied because the author of the report, Leonardas Marcinkevičius, I try to do my best, Leonardas, is here with us. A little bit about Leonardas. He's an expert at the Lithuanian Free Market Institute, the LFMI, focusing on monetary policy, inflation, and public finance. Since October 2022, he has provided in-depth analysis of central bank decisions and economic policy developments. Before joining LFMI, Leonardas worked as a business journalist at the Lithuanian news agency ELTA, covering economic issues from March 2021 to October 2022. He's a regular contributor to public debates on monetary policy and economic freedom in Lithuanian media. Leonardas, welcome to the We Are Innovation podcast.
Thanks for having me.
Thank you. It's a pleasure and congratulations on the report. By the way, I'm going in the description of the episode, I'm going to leave a link to the report so people can also go and read the full document. In any case, just to begin with, I want to ask you, if I remember correctly, in the introduction of the document of the report, you mentioned that the Digital Euro project is in a preparatory phase. Mm-hmm. And I would like to know what's the launch date and if there are any milestones that the ECB wants to reach before launching the Digital Euro.
Yeah, so until last year, we had a so-called investigation phase, meaning we had theoretical discussion, theoretical debates. Now we have trying to decide all the technical issues, basically how it will function, we will create the app, etc. So market participants are invited to suggest their own technical solutions, etc. So we will do this until October 2025. And as we promised, we will publish the costs. We will publish the decision if we are going to the next phase, meaning implementation of a digital euro. So we have not decided yet, do we need digital euro at all? We are just trying to figure out how it would function and what are the technical conditions of it.
The report outlines two forms of money currently in use. One is commercial bank money and the other one central bank money. Would the digital euro change this existing dual system in somehow?
Mm-hmm. I would say it will change current monetary system drastically because nowadays, as you mentioned, there are two types of money. One well-known is cash. If you are in Eurozone, if you look at the banknote, which is printed by European Central Bank, you will find signature of Christine Lagarde or if note is older a little bit, Mario Draghi. That means that ECB, European Central Bank, is taking liability and they guarantee the value written on that note. This is called central bank money. All cash circulating in the economy is central bank money. But nowadays, most people use electronic money, which in technical terms has nothing to do with central bank, because if you take a look on your credit card, on your app, you will not find any signature or any initials of European Central Bank officials. Because liability lies on commercial bank, which gives you the deposit account and which is responsible for the value which is written in the digital electronic form. These are two types of money circulating in the economy. One of them, as I mentioned, is electronic money, which is commercial bank money, and central bank money, which is cash. And majority of money currently circulating, used in the economy, 9 out of 10 times is commercial bank money, meaning majority of people, 90% of money in the economy are created and used and liabilitized on commercial banks. Now, what would be, this is great insight, what would be digital euro? This would be electronic money, which liability lies on central bank. This is, in monetary terms, quite new because electronic money never been issued by central bank before. This is the key thing when you talk about digital euro.
And related to that, to this topic, the European Commission, if I remember correctly, wants to make the digital euro accounts free of charge for consumers. How would the banks, the financial institutions, are expected to cover for this cost?
Basically, I guess there will be huge subsidies or something in return offered for commercial banks. But the problem is not only about the cost directly, because when you say something is free for consumer, that means someone has to cover it. So basically, every taxpayer would cover someone's need to open account. This is the idea. If something is free, taxpayers will cover it. One thing. But more important issue is that commercial banks, if digital euro is implemented, will be only, intermediates between central bank and the consumer. Because many people think, I suppose, that digital euro means, we go to the central bank and open the account in central bank, headquarters or somewhere else. But no, they see commercial banks as intermediaries. All financial service providers, not only commercial banks, but all electronic money companies, all the fintechs, will be responsible and will have a duty to open the account if the current consumer, wants to open CBDC account. That means if I have bank account in some commercial bank in Lithuania, that bank must open account of central bank digital euro. This is what would change, and I would say it will change the structure between consumer and the business, meaning commercial bank, drastically, because they will be someone who will just deliver the orders of a central bank, but not trying to innovate themselves to provide better services, better solutions, and better alternatives.
Leonardas, and I don't remember if you wrote about this in the report, sorry. Just one question, and does the ECB plan to launch like their own, let's say, digital wallet or something like that for the digital euro, or it will always it will basically force banks to open digital euro accounts?
As we discussed in the beginning, there are no concrete solution yet how it will function. But I suppose from the discussions, they will have to create and launch something like app. But, you can't just download the app and start using, banking services. You need identification. You need some form of consultants. So all these duties will lie on commercial players, not on the central bank. They will just, I suppose, create a platform, some sort of app, with some sort, solutions, but all the relation with the customer, direct relation with the customer, will be commercial banks' responsibility.
One very interesting fact that your report highlights, Leonardas, is that financial inclusion within the European Union has been improving. In fact, I don't remember what's the time frame, but it has grown from almost 92% to close to 97%, which is a very good metric, I would say. And this is, let's say, this opens the door to a common criticism to central bank digital currencies, which is that in many cases it seems to be a solution in search of a problem, and particularly within the EU context. What are the unmet needs that the digital euro supposedly is trying to address?
Mm-hmm. Yeah, you are very correct when mentioning that financial inclusion and number of unbanked people is reducing drastically. In 2017, it was close to 8% of unbanked people. Now it's less than 4%, which is, as you mentioned, I agree, very decent number, because we have to accept the fact that some people, despite all the incentives, all the subsidies, will not use commercial banks, and it's normal. And it's not because of cost, because what digital euro tries to solve, offer cost-free solution for people. But majority of people, actually, it's in the United States, but Cato Institute did the polls and find out that majority of people are not using banks, not because of cost, but because they do not trust current financial system. And my question is, especially if you have to go to open an account in the commercial bank, do you trust central bank so much that you will start, using banking services? I would say I have a lot of doubts. And another thing is current examples, because what we have to mention also that majority of countries, majority of central banks in all the world are trying to figure out some sort of central bank digital currency, some type of digital currency. Some go retail, some go wholesale, but they are trying to figure out some solutions. And Nigeria example shows that even in the cases when there are huge problems with unbanked people and opportunities to use electronic and digital financial services, people still are not using central bank digital currency because it does not offer, technical solutions, because you still need to learn how to use the app, download it, and even if people download it in Nigeria, they are still not using it. So this is why private incentives like cryptocurrencies are popular in such countries. So coming back to Europe, I would say the current problem is to offer, to find out solution to this problem. But there is a lot of, innovations, and a lot of people are using electronic online payments. They purchase, something in Amazon, in eBay, and can't use central bank money. And central bank money is the right of, Europeans, and we will provide you opportunity to have this right and use it. So I would say it's the, just I would say like this. Ordinary people do not think about it as a problem, but politicians and technocrats are thinking about it as a problem, and they're saying, look, you have a problem you haven't figured yet about, but we will solve it and we will help you. So I think it's quite funny.
Yes, indeed it is. And I mean, there are, please, this is my view, and I don't want you, please, you feel free to disagree. But I mean, in terms of innovation in general, there are very few fields in which Europe, and particularly the European Union, can feel proud of. Mm-hmm. One of them is fintech. In fintech, I mean, please, we are not sponsored by any of the companies I'm going to mention, but, Revolut is an amazing company. Wise is an amazing company, both one in the European Union, the other one headquartered in the UK, but both European. in fintech, I am not an expert, but I would dare to say that Europe is leading the pack. It's amazing, and that in a country, in a region, that has such amazing innovation, that financial inclusion is growing up. The numbers are exceptional. Leonardas, I remember in a previous interview for the podcast, an expert from Brazil, mentioned that in Latin America, for instance, 40% of adults are unbanked. So when you compare that to the reality of the European Union, you say, what is the problem? I mean, this should be, let's say basically, fintech particularly should get an award, probably a medal, something. Thank you for the services you're doing, and let them do their thing. But that we need the digital euro, and that should be. It really seems like what is the problem?
So I would say three things what we need to discuss, to understand how this idea about CBDC works. First, I would agree there might be more arguments and more discussion in the cases, as you mentioned, in Latin America. I would say there are no good reason to do such a project, which will be very costly and I guess not very popular with the consumers in Europe. I would say no country needs CBDC, but there are even less arguments for this project in Europe's case. Why so? As you mentioned, one of your mentioned fintechs, now it's licensed bank, and offers cost-free also solution. Actually, in that case, I'm not sponsored by any of it, but it's just, super cool thing. But I started to use it free, and I started to pay because they offer quite good plans, and I started to pay for them 10 euros a month because I get the opportunity to invest very easily, etc. So it offers not only basic services, but the combination of services, which is quite cheap, I would say. And in the basic case, when you need basic services, it's absolutely free. So no one in Europe can say, look, it's so costly to use banking services. We need tax and public funded alternative. One thing. So when we discuss about this issue, I guess we both agree, but it's actually not a problem, and we are trying to solve nothing. And I'm actually not covering this in the report you mentioned in that Epicenter paper. But what I found out, what is actual reason why central bank is doing it, actually we had the discussion about this paper and another paper published by LFMI with Bank of Lithuania officials. And what we highlighted, what is the reason that banking services in Europe are fragmented, and the solution, Visa and MasterCard, are Americans. So we need security in order to, something happens. Trump, wins election, starts to sanction Europe, and says for Visa and MasterCard, do not provide services for Europe. So this is their argument why some sort of, economic nationalism in that sense. But we need our alternative to Visa, MasterCard. But I would say in that case, if you need such alternative, you can go wholesale, not retail.
You were clear about how unclear many things regarding the project are. So I'm asking you something that, let's say, probably you can give us a guesstimation, not something based on information yet, but I would like to know your opinion. Do you think the end game here of the ECB is abolishing cash eventually?
Actually, it's a good question. I would not say so. There might be no need to abolish cash because there are two potential outcomes of this one. Before moving on to outcomes, I would say there are two actually regulations. One to implement and regulate digital euro itself. Another proposed by European Commission is on the legal tender. And this is actually related, but quite important topic also. Because nowadays, there is only European Commission's recommendation on legal tender. It was published in 2010, and it says, we are recommending to accept legal tender, meaning euro, in all the retail payments. If you are a merchant, we are recommending to accept cash, and you can only deny it only if someone comes with quite a huge note, and you don't have change in for that payment, and it's so-called goodwill principle. So you are recommended to accept euro cash. Now they are changing the status of legal tender itself, meaning including cash, but it will be mandatory to accept cash payments, not only cash, but legal tender payments. Meaning if some sorts of exchange of payment is having status of legal tender, merchants have the duty to accept it. So the trick is they are declaring not only cash, but also digital euro as legal tender, meaning all the merchants in Europe will have to change all the payments infrastructure and make it possible to accept for consumer to pay by digital euro also. So in both cases, we have some cafes here, in Vilnius, who accept only card. Now we will have to accept cash also, and vice versa. There are a lot of places, and nice places, I actually love that authenticity, will accept only cash. And they will have a duty to accept digital euro if the project is implemented. So I would say there is no contradiction, and what they are, kind of communicating, but digital euro will not replace, but contributes, adds on cash payments. So this is their rhetoric. So I would say, coming to the outcomes, there are two possible outcomes. One, if digital euro will not be popular, and I guess it will not be popular because there is a lot of competition, and no one basically will use it. I guess there are very few people who would think, oh, it's so nice, I trust central bank, and I want this particular app, and I will start to use it. So basically, it will be very expensive because it costs, and they have no answer about the cost yet. It costs not only creating the platform infrastructure, but to maintain it. And all the commercial banks, what they are saying, when we are creating something new, we are budgeting not only the cost of creating it, but also of maintaining it. So it will be very costly, to implement it and to maintain the app, which I guess will not be used by many people. So that means it's very cost in terms of cost. In terms of cost-benefit analysis, it's very unwise to do such project. Another potential outcome is if they will see that it's not popular, they will try to create, incentives for it. So what might be the incentives? Like one of the potential, abolishing cash. Maybe, we don't know, when it's on place, they can do anything. Like in current form of regulation, there is prohibition to pay interest on digital euro, because there were some, discussion. You will try to incentivize people to use this type of money, and you will have to offer some benefits. So you will offer some sort of higher interest rate in order, to incentivize people. So we are saying we are not doing this right now. But I guess they will have to figure out some solutions if they want to create this product, popular.
In a project like the digital euro, do you notice And this is important for its repercussions, regarding human rights, freedom, and many other things related to our fundamental rights of citizens. Do you notice that an influence coming from the Chinese government and the Chinese Communist Party could be found? Because as far as I know, and please correct me if I'm wrong, because I'm sure you know these issues better than I do, the digital yuan and the project of the CBDC of the Chinese Communist Party in charge of ruling China is, let's say, the most advanced and probably like the original. Maybe it seems that it's like the Kickstarter of all this movement in favor of CBDCs. And I have to admit that I feel a chill, let's say, in my back every time I think that decision makers in the West, in democratic societies, are taking measures that come from the book of the communist rulers of China.
I would say authoritarian regimes, China, Russia, are very good on implementing their own central bank digital currencies. And we understand why. Actually, a lot of libertarian criticism of such project is actually about human rights. And what we are trying to do in this particular paper, in my research, find another arguments. Because I would say in every discussion, every freedom-loving person would say no for CBDC just because you don't want bigger government. And it's a decent argument. But a lot of technocrats, a lot of politicians, and some people, I would say, are not freedom-loving. So you need another other type of arguments, technical, economic, etc. So this is why we are digging deeper into inflation, monetary policy arguments, etc. But I agree with you in general, but every time you start a conversation with neutral person, which is not informed about CBDC, you would start and say, it's actually very developed in China. It's already implemented in Russia. Do you see some trends? I guess people will say, of course, I see. And I don't want authoritarian government in my country.
How about cybersecurity? Because this project would be in the hands of the European Central Bank, an organization run by bureaucrats, with all that entails, we could say. Have there been any instances of the ECB security being breached? And how, let's say, this totally centralized currency run by the ECB, would it, let's say, create more incentives for breaches, would create more, let's say, potential dangers? How do you see that issue?
Yeah, I would say in terms of cybersecurity, especially the geopolitical reality as such we have nowadays in Europe with, Russia, China up front and becoming more and more aggressive, I would say CBDC should be raised, this project should be also debated from the perspective of national security also, because it's not a very good idea to centralize all the financial services, all the economy in the hands in one server, basically. Because even if the system is supposed to be unbreachable, unhackable, even most wonderful system, if it's created by people, it can be hacked. And if you centralize and make Europe more vulnerable, because the target is clear, and if you want to disturb, the economy, you just need to target central bank in this case. I would say it's not very good idea. And actually, International Monetary Fund also raised the issue with central banks, and it's not only issue on ECB side, but all the central banks have not invested enough in terms of research, in terms of looking for solutions in cybersecurity cases. And even if we think, oh, central bank is so secure, they have all the professionals they need. Actually, there are at least two very huge cases in ECB history when consumer data was leaked. In 2014, it was more than 20,000 people. All the personal data of their, emails, phone numbers, IDs, etc., was leaked from ECB register. And in 2019, it was announced in 2019. Actually, the case happened year before, and just after 1 year, they noticed, or they were not, reporting about it. They just announced it 1 year after the case about the breach in 2019. So there are two huge cases, and I would recommend if someone is interested in terms of security, cybersecurity, to take a look to these cases, because it's quite interesting and it clearly shows that there are no such thing as unbreachable and unhackable electronic systems. What is the advantage of cryptocurrencies? It's decentralized. And even if you leak your password or something, it's just your account. You can't breach all the system because it's decentralized. With central bank digital currency, we are moving to opposite direction.
Another thing I would like to explore with you quickly is the issue of central bank digital currencies and inflation. I think you claim on your report that central CBDCs are basically only useful if inflation is below 2%. But if it goes above that level, things can turn more problematic. What's happening? What would happen there?
Yeah, inflation and monetary policy is another huge issue, because one of the technical arguments, which is not, so popular between the consumers, I would say, but between the technocrats, what we are claiming, it will increase the effectiveness of monetary policy. This is their claim. I would claim it's quite opposite, because what they are targeting now is so-called price stability of 2% annual inflation. And my claim is that you can easily increase the inflation with CBDC, but you can't reduce it. Why so? Because from the subjective perspective, and I guess Argentina is a very good example of it, people, if they trust currency, they keep it, because demand for that currency increase. And what is demand for currency? To keep it, to have it in your pocket, or to have it in your account. If the demand for currency decrease because of many reasons, one of them is printing more money and reducing the demand for every unit of that currency. But basically, what might happen if you decrease that demand, people will go to that direction, and you can't prevent it. What happened with Argentina, why they started to use United States dollars, not because it was some sort of smart plan of central banks, but actually people basically do not trust the currency. And it's very difficult to stop inflation. Actually, if you look to money supply data in Argentina, money supply stopped increasing so rapidly, but inflation is still increasing because people do not trust that currency anymore. Same with digital euro. If you start to manipulate, this means one of the potential technical solutions is to increase inflation is to implement holding limits. And we are talking about quite low numbers, from 500 euros to 3,000 euros on one account, meaning you can't have more. If we implement these holding limits, what's the purpose? But people would go and spend this money. But afterwards, how you make sure that people will return and start using this currency and hold it again? When people start to spend it and do not want to keep it in their pocket, how you will do that people will start to use it again? How you will say, oh, it was one case when we implemented and used holding limits. We promise you, we will not do it again. How many people will believe it and will start to use digital euro again? This is why I suppose it's only on one direction in terms of monetary policy.
Before I let you go, Leonardas, and again, really thank you very much for your time today. Let's travel in time to October 2025. Let's suppose the digital euro is launched as it's estimated in that date, in October next year. According to you, let's assume the thing is launched. What would be the best case scenario to happen, and what would be the worst case scenario that could happen?
So before moving to your answer, what I need to highlight once again, on October 2025, they will just decide if we are moving to next phase. It will not be the case, but here we go, this is digital euro, we start to use it on October 2025. It's just one of the phases. And from what I know personally, from insights from corridors, of institutions, there are less and less motivation to continue with this project because key people left the project, as I know, and it's not 100% that they will move on so enthusiastically. And even if they move on, it will be a very slow project because they have no experience with consumers, with IT solutions, with apps creation, etc. So it will be very slow and long process, I suppose. But let's say one day digital euro is launched. Best case scenario is that government understands that if it's unpopular, we should not move on it and try to incentivize. Because, with many government ideas, like with all the history of central bank, if something is not working, what we are doing, we are not stopping the project. We are giving more power to the central bank. So I would hope, but the best case would be if they see that CBDC is not working and people are not using it, they're just saying, okay, it was costly, it was inefficient, it was not working, but we tried and we stopped. We learned our lesson. This would be best case scenario, I think, if CBDC is implemented. Before that, the best case scenario would be to stop on October 2025 and say, okay, we are not moving to the next phase, but it's my dream. Worst case scenario, I would say, is that they create so much incentives, so much subsidies, so much, holding limits and additional source of interest rate and incentivize people to start to use it or prohibit cash, as we discussed, and create so many legal requirements for the merchants, but they accept it, but they have to give, change in digital euro, like when we implemented euro in Lithuania, euro as a legal tender, what government did, they just said, okay, there are a few months when we have both currencies, litas and euro, but when you give, change, when you buy something in supermarket, you will get change in euro, not in litas anymore, despite even if you pay with litas. So this might be one of the tools, how you do it. You pay with electronic money, with your credit card, you get your change in digital euro. I would say in such cases, there are two huge risks that financial stability is at stake, because in current monetary system, all the funds, all the deposits are used to give loans through fractional reserve, and I'm quite critical on this system, but I think it's way better than to have total control of central bank money. But I would say financial stability of current financial players and innovation on that side is at risk, because digital euro might push off, all the commercial players and make them only as a tool, as an intermediary of government, and would push them out from, from the market. So I would say this is quite huge risk. And if the current system is working, if it's not so bad that we discussed, many people use banks, use fintech, have more and more opportunities to have very cheap, financial services. I would say don't fix what's not broken.
Thanks again, Leonardas. I'm going to leave in the description of the episode the link to the report you wrote, and it was published by Epicenter. Also, people should check your work at the Lithuanian Free Market Institute. I'm going to leave a link as well, and to what Epicenter is doing with the LFMI and other think tanks that are partners of that network that is headquartered in Brussels. To everyone who listened to this episode, thank you very much. Don't forget to subscribe in whatever platform you use to get your podcasts. You can also find We Are Innovation work on YouTube, where you can find this podcast and many other content that we produce. And we meet again in the next episode of the We Are Innovation.
Thanks for watching this episode of the We Are Innovation podcast. Don't forget to like and subscribe. To know more about We Are Innovation, visit weareinnovation.global.